All right, everyone, welcome back. Today is Wednesday, August 2nd, 2023, and this is the monthly investing adventure. So up to what, 6 videos now, 5 months worth of investing, something like that. Sorry I'm a day late. I meant to do this on the 1st, but as usual, real life gets in the way, and it is what it is. But let's just jump right into it, and then we can go over the buys for this month. So as of the end of July, so July 31st, 2023, so this was on Monday market close, the portfolio was sitting at $1,381. If you were to annualize this return for the entire year, it works out to be 31.4%, which is ridiculous. I know, but that's the math. The last couple of months have been pretty good in the market. There's been a big rally, and we're doing pretty well. Today is a slightly different story, but I do want to take a moment to kind of talk about it because there was news that Fitch downgraded the U.S. credit worthiness rating, citing governance, that we have a lot of political gridlock and divisiveness and other things that they think will impact our ability to pay back our debt. Not that we don't have the means to, which is completely different. It's just that the political situation is going to cause issues, when debt ceiling comes up, shutdowns, all of that thing. And that was their reason for lowering the credit rating of the U.S. And markets around the world and the U.S. Are down today. So it is what it is, But again, that's noise. We will keep to our plan and just go on at it. In terms of asset allocation for this portfolio, let me share it very briefly. We are in 70% stocks, 20% bond, and 10% gold. The stocks are split up evenly into large cap growth using the NASDAQ 100 QQQ ETF, and half in small cap value as represented by AVUV, which is an Advantage small cap value fund. So that's the allocation. In terms of what we do, every month I have a direct transfer into this account of $250. If you're following along, you do whatever is comfortable for you and is within your budget. But whatever it is, it's definitely better than nothing. And you can just scale it up or down based on what you put in. So if I put in 250 and you can only put in 125, then you're going to be tracking at half of what I'm doing. If you can only afford to do $50 a month, it'll be a fifth of what I'm doing. So you get the idea. But like I said, it's better than nothing. Next, let's take a look at how the performance has been now that we've got a couple of months under our belt. So on this chart here, the orange dotted line is kind of the forecast for how the portfolio is supposed to perform based on historical backtesting of the different asset classes. So over the long term, the forecasted return for this allocation is roughly 9.4% on an annual basis. Of course, in reality, it doesn't do a straight line, right? There are always ups and downs. But from a forecasting standpoint, it is shown as a straight line, the dotted orange line. And then the blue line, the darker blue line, is just our actual performance. And if you look at the chart, you can see that over the past several months, we are above that orange line. And if we were to, like I said at the beginning of the video, to compound this return, it's actually compounding at 31.4% through these first couple of months, which is, pretty crazy. Like I said, markets can go up, but they can also go down. It's not always smooth. The benefit with this allocation, because of the gold component and the bond component, is that it should be a little bit less volatile than the market overall. Doesn't mean that there's no volatility, but it should be a little bit less volatile. All right. With that out of the way, let's get back into the computer. Let me make some notes first, and then we can get back in here. So give me 1 second. All right, with that out of the way, let's get back into the computer and make our buys. So here is our monthly investing adventure account in Fidelity. And you can see that today it's down about 1%, just due to market news. But if you were to look at the NASDAQ or other components, you know, it's down a lot more than 1%. I think the NASDAQ is down almost 2% at the moment. So, you know, the gold and the bonds are helping to alleviate that. In any case, let's go ahead and go make our buys. So with $250 available for us to trade, you can see that it's actually about $251 because we had a couple of pennies left over from last month. I'm just going to go and buy into the allocation for these 4 assets. So we'll start with the NASDAQ 100, the QQQ. I'm going to go ahead and buy $93 worth of that. So we're buying dollars. We will buy at market because it doesn't really matter when you're investing. NASDAQ 100 is pretty liquid, so $90, preview, place the order. All right, enter a new order. Next up is AVUV, which is the small cap value from Advantis. We'll buy dollars, and we're supposed to buy $69 of that. So I'll put that in. And the reason that we're buying these different dollar amounts is that we're rebalancing as we're adding new funds to the investment. So preview and place. Okay. Next up is government bonds. That's GOVT. We'll buy dollars again, market, and this time it's $60. I'll enter a new order, and this time we're going to buy gold. Buy dollar, market. And it says here I'm supposed to buy 27. So there's something wrong because I can see that there's $44 left over in cash available to trade. And, you know, it's not that big of a difference. I'm just going to go ahead and just spend the $44 on gold. And we can use the next month to rebalance. And I'll check my math before we do this. But like I said, it doesn't really matter. Oops, see, exceeded my value. So I guess my notes were correct. I have $29 of buying power. So that's close to the 27. So let me revise this. Sometimes the buying power is not updated accordingly. So we'll make it 29. Place the order. All right, that's also executed. Let me go back and refresh the screen and we can take a look and see where we sit. So before the buy, we had $251 in SPACs. That's the government money market fund, basically cash. So let's refresh. All right, as you can see, after the refresh, we have pending activity of almost 251, which is good. I don't like to have a lot of cash left over, even if it's just $1. And then the other 4 assets are shown in yellow because there was activity on these assets today. So Fidelity just highlights it in yellow. But this is where we're sitting. And if you were to look at the allocation, this is 35% in small cap value, 35% in large cap growth, NASDAQ 100, 20% government bonds, and 10% in gold. So this pretty much matches up with our asset allocation. And that's pretty much the buys into the monthly investing adventure account. We're moving along very nicely. I will see you back here around September 1, hopefully on September 1, and we'll do it again. Thank you for following along and checking in, and I do hope that you find it useful. Leave me a thumbs up, subscribe, all that jazz. It really helps. All right, thank you. See you later. Bye.